Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial lives of companies. And this time we have Birdie Corporation's annual report for the fiscal year ending July 2025. Get ready, because this report is a roller coaster of early stage business challenges and strategic shifts that will make you question the very nature of making it in the corporate world. So Birdie Corporation, a company focused on financial literacy seminars, has just released its annual report. Now, most companies would use this to brag about massive growth, but Birdie, well, they are a little different. They are upfront about their struggles, their reliance on a single customer, and their precarious financial footing. It takes a certain kind of bravery to lay it all out there. You can find them listed under ticker symbol BRWC if you are curious. Let us dive straight into the juicy financial details. As of the 31st of July 2025, Birdie Corporation reported total stockholders equity of $14,370. That might sound like a lot, but when you compare it to the previous year, it went from a negative $296 to this small positive number. That is quite a leap, but it is still a very tiny amount of equity for a company, signaling a business that is very early in its journey and still trying to find stable ground. Looking at their assets as of the 31st of July 2025, their total current assets sit at $19,570. Most of this is made up of cash and cash equivalents, which is about $2,171, and a significant chunk in prepayments, around $17,399. Prepayments essentially means they have paid for services or goods that they will receive or use in the future. While having cash is good, the small amount suggests they are very lean. The large prepayment figure, especially with $14,000 of it being to related parties, might be something to watch closely, as it could indicate potential upfront payments for services that are yet to be rendered. Now, on the flip side, their liabilities are $5,200. This is a good sign that their debts are relatively low. However, it is important to remember that the company has a very small amount of equity, so even this relatively low debt level could be a significant burden. Let us look at how they performed for the year ending the 31st of July 2025. Birdie Corporation reported revenues of $30,000. That is a modest increase from $25,000 in 2024. Their net loss for the year was $17,299, which is an improvement from the $24,082 net loss in 2024. So, while they are still losing money, they are losing less money, which is a step in the right direction. All things considered, the revenue itself comes entirely from their financial literacy seminar services. And here is where it gets really interesting for both 2025 and 2024. One single customer accounted for 100% of their revenue. This is an incredibly risky situation. Losing that one customer would mean zero revenue overnight. This reliance on a single client is a massive red flag, and it highlights the company's lack of diversification and its vulnerability in the market. Remember those prepayments we talked about? The report shows that as of the 31st of July 2025, there were $14,000 in prepayments to a related party. This means they paid in advance for services or goods from someone connected to the company. This could be a legitimate business transaction, but it also warrants a closer look to ensure transparency and fairness, especially when the company is so reliant on external funding and its own limited revenue. When it comes to earnings per share, the numbers are effectively zero for both years, $0. This reflects the company's small revenue and ongoing net loss. It is not unusual for very early stage companies, but it does mean that as an investor, you are not seeing any profit generated on each share you own right now. Now, leadership, there have been a few changes. Xiong Zhao is now the Chief Executive Officer, President, Secretary, and Chairman, taking over the CEO role in March 2025 from Yunyuan Chen. Yunyuan Chen, who initially took over as CEO in July 2024, is still the Chief Financial Officer and Treasurer. These shifts suggest a company that is actively trying to find the right leadership to steer it forward, but also indicates a degree of instability at the top. Looking at general and administrative expenses for the years ended the 31st of July, 2025 and 2024, the company spent $47,299 and $49,082 respectively. These are mostly for things like audit fees, stock registrar fees, and legal expenses. These costs are pretty standard for a company operating in the public market and trying to comply with regulations, but they are significant relative to the company's tiny revenue. Birdie identifies itself as an emerging growth company and a smaller reporting company. This means they have certain accommodations and less stringent reporting requirements, which is typical for smaller businesses. They have also elected not to use the extended transition period for new accounting standards, showing a commitment to keeping up with financial reporting rules. In their management's discussion and analysis, something called going concern is repeatedly mentioned. This is a critical phrase in financial reporting. It means the company is facing significant financial challenges, and there is real doubt about its ability to continue operating for the next year. The report explicitly states their ability to continue depends on generating future profits or securing necessary financing. This is a stark reminder of their precarious financial position. When it comes to risks, cybersecurity is highlighted. They acknowledge the importance of protecting their data. While they have not encountered material cyber issues yet, they are aware of the risks, especially with third-party providers. This is a standard disclosure, but in today's digital world, it is always a critical area for any business. The company admits that its internal controls over financial reporting are not effective. They point to a lack of a functioning audit committee, inadequate segregation of duties, and insufficient written policies as major weaknesses. This means there is a higher risk of errors or fraud in their financial reporting. They are planning to implement measures to fix this, but it is a serious internal control issue that investors should be aware of. Interestingly, they have not granted any stock options. This is different from many companies that use options to incentivize executives. Birdie Wind seems to be using stock issuances as a form of compensation, as seen with the issuance of shares to new directors upon their appointment. For example, 960,000 shares were issued to 3 new directors in exchange for consulting services. This approach can be effective for early-stage companies, but can also dilute existing shareholders. Another point to note is that they have not formally adopted a code of ethics, citing their small size as a reason. They believe general fiduciary duties and laws are sufficient for now. While understandable for a very small outfit, a formal code often provides clearer guidance on ethical conduct, especially as a company grows. This customer concentration risk is perhaps the most glaring issue in this report. The fact that one customer accounts for all of their revenue for 2 consecutive years is a deal breaker for many investors. It is a single point of failure for their entire business. They are essentially betting their company on the continued business of one client. This is not a sustainable, long-term strategy. So, what is the overall story here? Birdie Wind Corporation is an early-stage company operating in a niche but potentially growing market of financial literacy. They have managed to grow their revenue slightly and reduce their losses, which shows some progress. However, their financial position remains extremely fragile. Their reliance on a single customer and significant internal control weaknesses are major concerns. They are clearly operating on a shoestring budget, and their future hinges on securing more clients and potentially further funding. The leadership changes suggest an ongoing search for stability and effective management. The company is transparent about its challenges, which can be seen as a positive given the circumstances, but transparency does not automatically translate to success. For investors, this report paints a picture of a very high-risk, speculative venture. The potential for growth exists given the nature of financial education, but the path is fraught with peril. The small positive equity of $14,370 is a minor victory, but it is dwarfed by the ongoing losses and the critical going concern notes. It is a long way from a stable, profitable company. In conclusion, Birdie Wind Corporation is a company at a critical juncture. They need to diversify their customer base, strengthen their internal controls, and find a sustainable path to profitability. Without these changes, their future remains highly uncertain. It is a classic example of an emerging company trying to establish itself, and their continued success will depend on strategic execution and a bit of luck. What are your thoughts on Birdie Wind Corporation, strategy, and its financial health? Do you think they can overcome these challenges? Let me know in the comments below. If you found this deep dive valuable, please hit that like button and subscribe to Corporate Decoder for more. And don't forget to join our Discord community, linked in the description for even more behind the scenes discussions on these financial reports. See you next time.